Now we will practice a short worksheet by using the information from brief exercise 19.3, and I already made the structure of the worksheet. You could do it by hand or using a small Excel formula. So let's see. January 1st, 2025, Hinman Company had planned assets of $280,000 and a projected benefit obligation, the same amount. Then you have other information. Service cost $27,500, settlement rate was 10%, actual and expected return on plan asset both are the same, 25,000. Contributions were made by the employer 20,000 and benefits paid by the employer 17,500. And we have to plug in the numbers in this worksheet, and it will also give us the journal entry balances. We will plug in the numbers at the same time. We will show debit credit. So first column shows all the items from beginning balance to ending balance and all those other items that impact on pension expense, including the contribution and benefits. And we will also here do the memo record for PBO balance and plan asset balance. Let's do it. So the beginning balance on January 1st, 2025 is $280,000. So we will write it down here. It's $280,000 and it is a credit item. So we will notify it as credit to the next column. Since it's an obligation or a liability, it's the credit item, balance is credit. Now they say the plan asset balance is also the same, so I just copied and pasted it, but it's an asset balance, so it's a debit item. I just plugged in the beginning balances. Now let's record the service cost, which is $27,500. Of course, is the main pension expense item. It increases the pension expense, so we will plug in here the service cost $27,500. Remember, it's increasing the pension expense. It's a cost, so it's a debit balance, so I plugged in debit. And then at the same time, it's increasing our PBO or the liability, so I will credit the liability or PBO $27,500. So we did the credit item here. Now we will record the settlement rate, which is used to calculate the interest expense on PBO balance. So it's 10%. It's very easy. You don't need a calculator, but if you want, you can still show it. It's based on the PBO beginning balance and multiplied by 10%. So our interest expense is $28,000. Again, it's an expense, interest cost. It's also increasing our liabilities, so we debited it under the pension expense column, and it's also increasing our liabilities or PBO balance. So 28,000 we will show under the PBO balance as a credit items. Next one is expected return on plan assets. So this return is also a part of the expense, but it actually reduces the expense. It's a return, so we'll show it in the same column, but remember, return gains, incomes, all those are credit balance, and it will reduce your pension expense. So we'll record the return $25,000 here. It's also given, and it's a credit balance, but impacting our pension expense negatively. And this return is on our plan asset, so it will increase our plan asset balance, which is $25,000. Since our plan asset balance is increasing because of this return, it will be a debit item. Then here, contributions made by the employers. So employers are contributing $20,000. So they are putting $20,000 into the plan. So cash is reducing. So we will credit cash. And then it is being added to the plan assets. So we will add this $20,000 to our plan assets. Of course, plan asset is increasing because of these employers' contribution. We'll debit it. Next one is benefits paid by the employer, 17,500. So these benefits are paid from these plan assets, so it is reducing our plan assets, so we will credit plan assets 17,500. At the same time, it is reducing our liabilities. We are supposed to pay, it was our obligation, but this year we paid it, so 17,500 we will debit it because it is reducing our liabilities. So both our asset is reducing, our liability is reducing. Since asset is reducing, we debited plan asset. Liability, since asset is reducing, we credited plan asset. Since liability is reducing, we'll debit PBO. So now how we will figure out the balance? So to know the balance, you can do it by hand when you are doing by pen, paper, pencil, or you can do a small formula. But no, this is our goal, to produce a journal entry, and we will also figure out the journal entry balance using these all journal entry column lines. And if this journal entry based on the contribution made and pension expense are not balanced, it will result in a pension assets and liabilities. Also, we'll figure out the ending balance for PBO and plan asset, and the difference will also tell us whether the plan is underfunded or overfunded, and this will also tell us the plan pension asset or liability. So for pension expense, let's figure out the balance. It's a debit balance, so we will add these two debit items, and then we have return, which is reducing or which is a credit item. Under the pension expense column, we'll subtract that. So our balance for pension expense is 30,500. Remember, it's an expense, and of course debit sides are bigger, so we will figure out and call this balance as a debit balance. You can do a small t account, so you will end up with the same pension expense, 30,500. Now for cash part, we just have one item, and it is a credit item. And now if you check this journal entry, 30,500 debit and 20,000 credit, journal entry is not balanced. Credit side is off by 10,500, and this is how we'll balance the journal entry, plugging in the difference, and we will credit it since credit side is lower, and since we are crediting it, we will call it pension liabilities, and we will figure out the same balance by using the memo record balances. Let's calculate the PBO balance. So PBO balance is a liability, all are credit, but remember, when we paid the benefits, it reduced our PBO, so we debited it, so we will subtract the last balance. This is the beginning balance, 280,000. Then we added the service cost, then we added the interest cost, and then we subtract the benefit paid. So our PBO balance at the end of the year is 318. Of course, credit amounts are higher, or if you do the T accounts, you'll also see the credit balance 318,000. We'll do the same for plan assets. It should be a debit balance, so beginning balance 280,000. Then we added here 25,000 because of the return. Then we added 20,000 because of the contribution. Then we subtracted 17,500 that was paid as benefits. So we added all debits, we subtracted credits, and it gives us the balance 307,500. Now this is a debit balance. Now if you take the balance for these two, of course you see the liability PBO is higher than the plan assets, so it's actually underfunded. So now if you take these two numbers, you will see that, let's take the little difference here, you will see that there is a credit balance, credit side. This is another way to figure out the pension liabilities. So this is how you can do a small, quick pension worksheet.